Kimberly Young here, CPA and accounting professor with Money Magic Revealed. Would you like to make wise investments one day? Would you like to be able to put your money into something that is working for you while you're at your job, working for you while you're sitting on your front porch sipping lemonade, working for you while you are sleeping? I mean, of course you do, right? We want our money to have to work harder for us than we have to work to earn more money. So, one of the key ways to do that is to understand how to read financial statements. So, I'm just going to give you a few quick tips on understanding this because when it comes to investing in a company, we need to be able to see if this is a company that looks like it's going to continue to be profitable, if it's going to, open more stores in the future, if it's going to be something that they're trying to scale their business, they're trying to increase it to increase those profits even more for us as investors. I've talked to people who are elderly who say, my husband and I could have made way more money if we would have understood how to read financial statements and knew whether or not companies were a wise investment or not. Because we didn't, we just stayed away from it completely. So I don't want that to be the case for you. Now, financial statements are not a crystal ball. We can't see the future. It doesn't mean just because we can read a financial statement that we automatically know everything that's going to happen with the company in the future. But a lot of times, the history of the company does help us to make projections as to what is going to happen in the future. So, a couple of the main financial statements that we're going to look at are the balance sheet and the income statement. So the balance sheet is just going to tell us where the company stands financially right now. And you can look these up for any public companies, meaning these are companies that sell their stock on the stock exchange. So you can go to Yahoo Finance or wherever you look for your numbers, but you can go to every individual company's balance sheet, look at their financial statements, click on balance sheet. The assets or anything they have of value, anything financially valuable that they have, the liabilities or obligations they have that are tied to those assets. So anything left over is going to show up in the equity section of the balance sheet. If we end up seeing that a company has almost as many liabilities as they do assets, then they are very high in debt, and that makes it riskier for the company. Every company, every individual investor have different approaches with debt, but that is a higher risk on defaulting on their debt if they have more of it. So that's one thing we're looking for. We want to make sure that they do have cash on hand, that they are strong in that way, because a lot of times companies go out of business because they don't have the proper amount of cash on hand. So those are a couple of the big things that we're looking for with the balance sheet. With the income statement, that's going to show all of the company's revenue from their normal business operations minus all of their expenses. Some companies are going to have an insane amount of revenue, billions and billions of dollars in revenue. But if we look at how much they have after all of their expenses, which would be our net income number, and if that's way lower, then that tells us that their expenses are really high. A lot of companies that you know really well have huge revenue numbers, but they have so much in expenses that they actually have a net loss at the end of the year. So digging in and seeing, was it something that they were trying to create a new product that year and that's why they had a net loss? Or is it just because their operating costs are so high, they really don't have very good potential for making high net income, which is going to make the company much riskier as well. So you're looking for having plenty of cash on hand in their balance sheet, not having too many liabilities that their assets are going to have to go towards because that's higher risk. And we're looking for a high net income number, not just high revenue numbers. So that's just a small glimpse into the financial statements that we can start to analyze whenever it comes to considering an investment in a company.